Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey, everybody. Welcome back to the Get Real Podcast. Ron Phillips here. Got a great show today. Many of you have heard from Jon Galane in the past, but for you folks who are new, you're in for a treat. We got my friend Jon Galane on the show. Welcome back, Jon.
Thanks. And we've got Tasmo and Cherry behind us to help with the excitement.
Yeah, they're fired up back there, and I don't blame them. They're on the Get Real Podcast. They should be fired up.
Yep.
For those of you who are not watching on YouTube, those are Jon's dogs, and they're pretty rowdy. Huh?
They're big investors.
Big investors, yes.
Daily and breakfast and dinner.
So, Jon and I have been speaking together. Well, not in the recent years, but in the past, in a previous life, Jon and I probably spent 10 years on the road together, speaking to investors all over the place about real estate and IRAs, self-directed IRAs, and all kinds of really fun stuff. We had a blast together. But Jon's the guy that I call when I want to know what's going on with anything in the economy or in investments, in the markets. He has, decades and decades and decades of experience in both of those. But he's also the owner of Mountain West IRA, which is a self-directed IRA company. He's an investor himself. Like I said, business owner. We won't go into how many businesses or what they were, Jon, but Jon's had several different businesses. Some of them are really cool with lots of fun stories. Anyway, proper introduction for Jon. In addition to that, he's just a great human being and a longtime friend of mine. So I wanted to have Jon on the show because we're moving into 2025. There's been all kinds of crazy things happening. I mean, just nuts with the economy, with the election, with you name it. And I wanted to get Jon on, just say I feel unburdened by what has been, Jon, and I'm excited about what's to come. I wanted to get your thoughts on 2025. What are your thoughts on 2025 from an economic investor standpoint, that kind of a thing?
From an investor standpoint, I see the future looks very bright. I think that we're going to see a normalization of real estate markets where there's a constant in general going up. We won't see these high, massive rates of return and these high, massive falls like we've seen in the past. I think that investors, it's funny, I was talking to some realtors down in Sedona. Sedona is a huge investment community. And they said since the day that Trump got elected, that the amount of buying that's going on there is incredible. Things come on the market and sell. People are just going into big investment markets, whether it's a high-end market like Sedona or South Carolina, or whether it's a general market like Boise, Idaho. People are buying. Things are not staying out on the market long. As you can tell, Cherry and Tasmo are very excited about the market conditions. Sorry, everyone. But they're probably going to hang out with us for a while. And I just see incredible things happen. I don't have to tell you about the stock market. You've seen what's happened in the stock market since the election. And so I see all markets just going up at a nice, steady clip. And granted, you'll have times in the economy when they're down a little bit, but I think over the next 48 to 72 months, we're going to see a lot of consistency in the market.
Do you think inflation's going to be reined in? And if so, how do you see that happening?
Yeah, absolutely. I see it being reined in the next 12 months. And the way it will happen is by getting money out of the market that doesn't belong in the market. You will see the American God, whatever the act was called that was first voted on when Joe Biden got into office. You're going to see all the unspent funds there, and they're trying desperately to spend those funds.
Spend them out before the end of the year.
Yeah, but believe me, that'll be gone. That will be the first vote that goes in front of Congress and Senate, is to eliminate that law and all the unspent funds, which will stop the horrid inflationary and dream ruining expenses that are happening in our economy. And I honestly believe that will be the first vote out of the box. So I'm hundreds of billions of dollars that will come out by budget.
I'm rather excited about this whole Doge notion.
I am too.
I really think that that's going to be a big deal. And I don't know what your thoughts are on it, John. I'd love to hear your thoughts. I feel like I hear a lot about that. They still have to get all of this through Congress, right? They have to, but
do they?
Well, I even if they do, let's just play the game that they do, because spending should be from Congress, and I do think there's probably some things that the president can do by himself with his committee. However, I think I reckon back to a day when the Speaker of the House made noise so loud and spoke so clearly and plainly to the American people that the American people rose up and forced Congress and the Senate to do their jobs.
Right.
And I think there can be the one thing I think that Elon and Vivek and some of the rest of the people that they're hiring can do is shine a big, huge spotlight on all of this waste, and the American public is just going to be really pissed. And I think Congress is going to be forced to act.
I don't know if they're going to be really pissed, because there have been people in Congress and Senate that have brought these horrid expenses out every year, and the American people just sleep through it. The difference is it's going to be Elon Musk telling the American people. And yes. I think that's where the difference is going to be. Because anybody who isn't a hack knows that Elon Musk is a magnificent businessman that has seen what he's done in space, in human pain and suffering, getting rid of that, in electric cars, and everything he touches. X, X, when he bought X, it was something like 67% Democrat and 27% Republican that were on X. Now it's 49-48. So it doesn't matter which side you're on, you're getting your voice out and heard, and you're getting information back that you should, right? I think you'll see X flourish, the truth flourish. I think you'll see Facebook fade because the information's not correct. You'll see Google and Google subsidiaries fade because the information just isn't correct.
Google's in trouble anyway, I hear.
I hear too. That's right.
Yeah, I don't know exact. I haven't taken a deep enough dive into it to really understand why.
Well,
but the Chrome
monopolization of various things, and Congress is after them for that.
Yeah, well, I mean,
both sides of Congress are after them.
I get, anytime you get both after somebody, I concern myself that I'm such an equal opportunity hater on most things government that when the government starts to really hate on somebody or a company, I start to go, wait a second, what are they doing that's right that the government hates? I mean, call me crazy, but I do every single time anyway. But I have for years thought that Google was way too powerful and way too big.
Yeah.
So I don't feel bad for anybody in that situation. Okay, well, let's. I'm going to completely shift gears. Let's talk about IRAs. I've had some questions recently, some kind of weird, not weird, but more deep deep dive type questions, John. I don't know that we really covered on the show before, but I want to start high level and then kind of dive down into those questions. And high level, for those out there who have not heard about self-directed IRAs other than the self-direction that they can do inside of their 401k, which is not the same thing at all. Talk to us about, like, what is a self-directed IRA? What kind of accounts can be self-directed, and what type of assets can be purchased inside of an IRA?
In a nutshell, all IRAs are self-directed. The difference is that when you're dealing with a broker, they can only sell things that their company will allow, that the SEC will allow, and that the NASD, their licensing organization, will allow. So if you have an NASD license, SEC and NASD determine what is marketable. And in those determinations, here's your love of the government. The government decides that only stocks, bonds, mutual funds, and bank CDs are marketable, right? But there's a whole world of things out there that you can put in an IRA, and that's what our company does. Mountain West IRA is we allow you to invest in those things. So real estate, all types of real estate, all types
real estate, mortgages, you name it.
Loans outside of real estate, just loans in general, companies. Private companies that aren't on the stock exchange, that don't go through the SEC. You can put those companies in. You can put, hold on.
I'm not sure they like the content, John. The high-pitched whine is one of the dogs. I'm not sure which one.
Yeah, that's Tasmo. That's a rescue. And he's come a long way. He's a really good dog. But
and they're gorgeous, by the way, for those of you who can't see them.
Sometimes that high-pitched whine will drive you crazy.
Yeah, they're gorgeous dogs.
Anyway, so things like that. Things we have a client that invests in cows. And he has a rancher that takes care of the cows. And when he started with about 25 cows, and he now has a herd of over 4,000 cattle. And they're milk. And that milk goes to market every month. So he makes incredible amounts of money. I call it a bovidend instead of a dividend from a stock. But he's huge now. He's huge as a rancher, an Idaho rancher. And he can't do it himself because it's an IRA, but he's got a ranch that handles all of his cows. That's where they
so it's in essence a business. He may have started the business, but he has someone else who runs it and everything else, right? Yeah.
Right. And you can do any business like that. So all those things are, apartment complexes, commercial buildings, all of those can be put in self-directed IRAs.
Yeah, I find it interesting how many people don't realize that you can do this. It's a pretty powerful strategy to be able to, for real, self-direct your accounts where you can actually buy what you want to invest in. Yeah. There's only two things you can't invest in, John. And if I remember them right, it's collectibles and life insurance.
Right.
Yeah.
Also alcohol,
which would be collectible.
Well, it could be. Problem with a collectible with alcohol is it usually doesn't stay collectible for too long.
Yeah, that's right. Well, you collect it in different spots. Right. It gets collected. You can't use it for personal use though. So that would, I don't know why anyone would do that. Okay, well then, what accounts can you roll over into an IRA? Because I know all IRAs are self-directed, but there's a lot of accounts out there that aren't, John.
Yeah, accounts that can be rolled over into a self-directed IRA are traditional IRA, Roth IRA, SEP, Simple, 401k. 401k that after either you've left an employer or after you've turned 59 and a half, if the employer allows, or if you own a business, you can start what's called a solo or individual 401k, and you can put your 401k money into that. and add to it in tremendous amounts through your business.
Yeah, those are I can't do it anymore because I have employees. But man, if you don't have employees on payroll, that is a tremendous vehicle to be able to chuck money into. The numbers that you can put in is, people don't get very excited about IRAs, John, because of the limits of what you can put in them. But rolling some of these other accounts into self-directed IRAs, you can put a ton of money.
Hey, we have people that work for local companies here in town and have racked up $500,000, $1 million that they can roll over into an IRA traditional and invest it tax deferred. Or they can take some of it and they can convert it to a Roth IRA, and you pay taxes on the conversion, but you can convert a little bit each year. So we'll have people that will convert 10% or 20% of their 401k into a Roth each year and pay the taxes on it, because once it's in a Roth, it's tax-free forever.
Yeah, and so walk us through why a person would do that. Because, back when we were speaking together, we would have people who would ask us about that specifically, and there was a couple of years where you could really do some cool stuff. I don't know if you can still do that anymore or not.
Yeah,
but.
And that was back in 2010 when Congress accidentally made a law where you could convert a Roth IRA, convert the whole thing, and take the taxes over 5 years. So people did it in that year. It was wonderful.
Congress, listen, I would love to be able to say that the best and brightest are the ones who are leading our country. I'm afraid it's not that way, folks. The way that something like that happens is because there wasn't one congressman or congresswoman who wrote that bill.
Oh, I can tell you exactly how it happened. There was an $80 billion shortfall in taxes. And in all their brilliance, they felt that if they allowed people to convert their traditional IRAs to Roth, that $80 billion taxes would be taken care of. And so what they did, they came up with this brilliant plan. I loved it.
It was brilliant for everybody who converted.
Yeah, because if you converted, you got 5 years to pay the taxes, and they believed that there would be enough conversions. Their bean counters felt there'd be enough conversions in that year to take up the $80 billion shortfall in taxes they had. And by the way, bean counters were right. There was $80 billion in taxes that year. But where they were wrong was Congress tripled and quadrupled their spending. So the $80 billion didn't cover it, because Congress and all their brilliance that you can spend money.
Not only that, John, but they that's stepping over dollar bills to pick up nickels. What they did was allow people to put now non-taxable money for generations into a Roth. Which is great. I think they should do it again. I think the bean counter should try it over again and see what happens. This is just proof positive, folks, that when you hear statistics that come from all of the experts out there, you can make any of these reports say anything that you want to say. That report said that it was going to do this, and it did do that. However, the thing that they left off is how much tax revenue are they going to miss now over the next many generations because they did that one thing in 2010. Anyway, that's a complete sidebar, but our government does things like that all the time. And if you know about them,
I will tell you that the tax cuts for small businesses, sub-S corporations, and LLCs that Trump put in, Trump and Congress and Senate put in his first term are going to go permanent. There is no doubt in my mind that in in 2025, they're going to go permanent. And that is a huge boon, both for entrepreneurialism in the United States and for tax revenues, because the greater you give power to entrepreneurs, the greater the tax revenues are. That's been proven time and time again. It was proven during Reagan's administration. It was proven during Trump's first administration, and it will be proven again in this administration.
Yeah, and I don't understand why this is so complicated to figure out. It's a very simple concept. So Roth conversions now aren't as sexy as they were before, but you just have to pay the taxes in the same year.
Oh, they're still sexy, because if you invest in property that's income property, all of your income is tax free for the rest of your life. So they're still sexy at any age.
Yeah, and I mean, look, guys, right now you can get, I think some of the new construction properties that are available just because of all of the incentives and everything that are paid for. You can get cap rates that are somewhere close to what the stock market returns with just the cash flow return, and that is the income that John's talking about while the asset continues to grow in value over time. And that leads us to talking about loans and UBIT. I think the other thing, if people know that they can invest in real estate or invest in other alternative assets through their retirement accounts, they probably don't know that their retirement account can go get a loan and then they can leverage into real estate. So let's talk about loans, and let's talk about UBIT and talk a little bit. Well, I've got some questions about UBIT, but
loans, UBIT, and UDFI are all the same thing. So there's a couple sections of the IRS code, section 512, 513, that allow people in their IRAs to take loans on that IRA money. So you can use other people's money to enhance your rate's return. And it's called UBIT or UDFI, unrelated debt finance income tax, or unrelated business income tax if it's a business. So you can put a business in with a loan, or you can put real estate in with a loan, and you can double to triple what you can buy with the money you have. Most lenders are asking for 40% down. So it gives you a little over double. And what you can do is buy this property, all of the, and you can do UBIT and UDFI either in a traditional IRA or Roth. I specifically love it in a Roth because all of the income is tax-free that you're getting. And when you sell a property, you can 1031 exchange the property for new property with a new loan and continue to grow both the money that was in the IRA and the loan value. So it gives you double duty on tax-free and tax deferral. There are some taxes that are paid on the other people's money, but it usually ends up being a couple $100. Like I had a property in Oklahoma. I had a property in Boise, Idaho that were both UBIT properties where there were loans on them. And my tax bill each year was between $200 and $300. But my rate of return was 200-300% over 10 years, right? Sometimes even 400%. And I'm not quoting rates of return. I'm just telling you what my rates of return were. And I had that access to that tax-free income the whole time. So I love UBIT and UDFI.
Yeah, so people get pretty spooled up about UBIT, and it's typically from a CPA who doesn't know anything about it. They just have heard about it, and they want to avoid taxes as much as they can avoid taxes. But they're not looking at what you gain from having the leverage on the property, and then juxtaposing that against the UBIT taxes. And then the other thing that I find, and then I guess this is the question that I have. I think we were talking on the phone the other day, which sparked this podcast today. Was I was curious what happens to UBIT once you pay the loan off, because if you're putting 40% down, you're paying off a 60% loan. You could use all of the cash flow from that property to pay down the loan much quicker. And by the time you get the property paid off, my question to John, I'll let him answer it now on the podcast, is, well, what happens because you've used other people's money to buy this property and you've paid UBIT the whole time? Do I continue to pay UBIT on the cash flow once I pay the loan off?
No, once you pay the loan off, and it's paid off for 12 months, has to be for 12 months. The 100% of the property becomes tax-free. So you can sell it and buy something else 100% tax-free. So it's another advantage, another little quirky thing in the law that once that's paid off, there is no taxable event.
Yeah, and I mean, guys, that blew my mind. This should be another thing that someone somewhere screwed up, because when you buy a property and at least in my mind, John, when you buy a property, use other people's money to buy it, the portion of the property that you've purchased with that money, that should just, in my mind, if I was the IRS, I'd be taxing that forever. But they don't, which means you can pay that property off, and you can still use it as an annuity payment for the rest of your life, tax free or tax deferred.
It's a quirky little thing that Congress always misses every time they want more taxes. It always gets missed because it's, here's the problem. Here's the problem with tax law and IRS. When tax law first came in on IRAs in 1975, it was about 1,200 pages. Now it's almost 100,000. So stuff has been put in there that nobody even figures out because it's been so long and it's so buried. And that's one of them, that UBIT law where you pay it off and it's paid off for 12 months and you sell the property. It's probably never getting touched because it's too much. It's too massive now.
Yeah, and you'd have to grandfather people in and then start over again, and
it's in the Department of Labor. It's not in Treasury Department. So it's when Treasury Department looks at it, which is massive bureaucracy. You're making me go back to Doge now. You're making me go. You have forced me to talk about this Doge again. And for those of you who don't know what it is, this is Department of Government Efficiency. Of all of the departments in the government, that is the one that I find the most attractive, because in any possible way I ever touch anything that the government does, I can clearly see waste, fraud, and abuse every single time. And they're not even saying waste, fraud, and abuse. They're just saying let's just make it efficient. Let's just like catch up to where we are in the world. Hey, and you want to hear my calculation for some of the cool investments that are going to be coming up in the next couple of years?
Yeah, let's do it.
Well, all these buildings that have 6% occupancy that no employee has ever come back to since COVID, is somebody is going to be smart enough to put together a syndicate that goes out, and they're going to put these buildings up for sale. Most of them are Washington buildings. Some of them are slightly outside of Washington, and some of them are in other states, but they're going to put together a syndicate. And this syndicate is going to go out and buy these buildings and make them unique buildings, office buildings, selling to Marriott Hotel. Marriott bought a prison in Boston a few years back, famous prison in Boston, downtown Boston, turned it into a hotel, really cool hotel, kept all of the aspects of the prison except changed doors, but the doors are opened by skeleton keys. It's very cool. But that's what's going to start happening. These Washington buildings are going to get sold off, and they're going to sell them off at a song just to stop the bleeding for the American people. And when I say a song, they're not going to be sold under value, but they're going to be sold at or close to value where they can be converted into really cool things. Right?
Yeah, I can't agree more.
The old FBI building being converted into a hotel and nightclub. I can. How cool.
I think that would be awesome. I think that would be so cool. Apropos even. And there's been several buildings like that, right? You talked about the one, there was the old postal building that got renovated.
By the way, if you're ever in Washington and you go to the old post office, the Ben Franklin post office that's now a Trump hotel, it is the most amazing building you could ever walk into. It's amazing. And of course the bar is great. The food is great. And I'm sure the hotel rooms are great.
Yeah.
But that was Ben Franklin's original post office that's now a Trump building.
Yeah, I'm just I couldn't agree more with you. I think that is going. It has to happen. The other thing too, I think, is something is going to happen with these malls. There are some unbelievably beautiful malls that are just nobody goes to them.
Yeah,
and something is going to happen with those. A buddy of mine and I were looking at a mall in Tennessee. It was up for sale. I think it was up for an auction actually. And we were trying to figure out like how you could repurpose that for like a live work, where you could do some cool office space for the people who live there, kind of like you do in a master plan community. But I mean, to have a posh place like that, if you could turn it into condos and apartment buildings, I think those would be so cool. I don't have the energy or the money to be able to do that, but I think those. Because, man, they're in great locations.
Oh my
and
God.
They're beautiful. I mean, some of these malls that are vacant are just gorgeous.
Could you imagine some of community buildings where you turn a storefront into a house and you've got community entertainment right inside there?
Yeah, all indoors. Yeah, I mean, I'm telling you, I think that is going to happen. Yeah. I think the people who bought the mall that we were looking at, ultimately they're going to tear it down and build hotels and some things like that. But, and I think some of these are so beautiful. It breaks my heart that they're so gorgeous and someone is either they're being torn down or, they're just rotting. They're just sitting there rotting. Doesn't matter how gorgeous the place is. If it's vacant for too long, it just becomes a dilapidated old building, which is really too bad.
But those syndicates, when people put syndicates together and do stuff like that, they're great for a self-directed IRA because you have income and potential growth.
You see, people, that's why we have Jon on the show. He brings me back from the rant. He started the rant and he brought me full circle right back to where we were supposed to be, which is talking about self-directed IRAs. And it's true. It's true. As a matter of fact, one of the things you can invest in with your self-directed IRA is these syndicates. Like you can be one of the people who invests as a limited partner in those syndications across the country. But don't overlook this. It's an amazing. Especially, don't get scared off by the UBIT thing. That was the main question that had me bring Jon on the show because I really wanted to know what happened after you paid the property off because. I think a lot of people, when they start to realize they can invest in real estate inside their IRAs, their end goal is to have cash flowing real estate that just they can take the money out from a Roth tax free forever. Traditional, still, you can grow everything inside of your IRA tax free, and then you take it out and you pay the tax on whatever it is that you take out. That cash flow, you never consume the capital that bought those assets.
Yeah.
That continues to grow.
Well, another thing, some people say, well, yeah, but if I invest in real estate in my IRA and I take the income out after 59 and a half, it's at my full rate, my full tax rate. True. But instead of taking the income out, if you convert 10% a year, you pay the full tax rate one time. And then all the income coming out is tax free for the rest of your life. Mm-hmm. So some people, some financial advisors are saying, oh, if you're over 40, it doesn't make sense to convert. They're so wrong because if you got real estate in your IRA, you can convert the real estate 10% at a time. So you can buy the real estate in the traditional and then convert it to a Roth at 10% a year, 20% a year, pay the one-time tax on it, and then all the income is tax free forever.
Yeah, and if you have a smart, it's not to say that all the other CPAs are not smart, but if you have a smart one who can help you do that, you can also figure right where you start to bump up against the next tier in the tax bracket, right? You don't want to jump tax brackets and pay more tax, but if you can get underneath that, like Jon's saying, 10, 20%, depends on how much money you're making every year and what tax bracket and where your money is coming from, right?
Yeah.
Because
really a simple question that you ask your CPA. Have you ever worked with people with self-directed IRAs in real estate, and what do you think about it? And if your CPA says, "Oh yeah, I've worked with people with self-directed IRAs, love it," then you know you're in a good place. If you find a CPA that says, "No, I've never done that, but it's a bad deal," then you have a CPA that doesn't understand IRAs.
And I mean, look, I say this all the time on the show. Real estate's not for everybody. Okay. And investing in real estate inside your IRA isn't for everybody, but it's for a lot of people. And if your CPA doesn't understand that, then, I don't think they're serving you very well. And we find that quite a bit. As a matter of fact, we just had a deal, John, that canceled because their CPA told them, this was a bad idea to buy real estate. Now
Seriously,
this was their CPA. Okay. Not their attorney, which is a whole other
IRA. We're talking about a CPA and regular real estate.
Right. CPA, regular real estate. Yeah. Just not a good idea. And not because of any tax implications for this person, but just because they don't like real estate. Right. So it wasn't that this person was going to have some negative impact to them from buying the real estate. As a matter of fact, they would have had a positive tax. And they probably don't know anything about that either. But it's frustrating when you get the wrong people advising you.
Yeah.
It can mean the loss of a fortune.
Yeah.
And so be careful out there. What John's saying is 100% true.
Yeah. You want to hear a cool, fun story? We had a bunch of clients. I'm going to say maybe 100 that invested in a private company. I'm not going to give the company name and all that, but they invested in a private company and they invested a good amount of money, maybe, I don't know, total about $250,000. And the company ended up being bought by a public company. And so, of course, they could no longer be with us because we don't handle marketable securities. So the company buys them and then has to pay all the private company stock off so that they can go buy it in the market. And this $250,000 turned into $30 million. So we had $30 million worth of clients' funds come in. And of course, it's going back out to buy the regular company in the SEC or the NASD. But I mean, imagine that, imagine you've got a private company that that a bunch of people invest about $250,000 and like 3 years later, it's worth 30 million.
Yeah.
I mean,
yeah.
And that's the kind of stuff that happens. It's the kind of stuff that happens with real estate too.
Yeah. And the cool thing about it is that you can invest in things that you know. You don't have to invest in things that just your stockbroker or whoever it is that's managing your accounts told you was going to be a good idea. You can actually go do the research yourself. You can invest in things that you know, like the guy who invested in cattle. I guarantee that dude knows something about cattle, or he knows somebody who knows something about cattle.
Absolutely, Ranger.
Yeah. But, so, I mean, look, that's the cool thing about self-directing your IRAs.
Yeah. The other thing is, if you're kind of nervous and you don't think that the real estate market's going to do great the next few years, and if you have rental real estate, you still get the rents. It's we went through this, and I'm sure you remember, Ron, when we went through 2006 through 2010.
Mm-hmm.
I was telling people, beware, the market's going to come down. And I was telling them, I even called the bottom of the stock market and that of 6,400. And I said, beware. And I said, if you're going to invest, know that you're going to have to hold your real estate longer. So if you have investment real estate and you've got rentals, you're still going to get the rents, but you may not be able to sell it for about 5 years, or sell it for a positive amount, positive growth, capital gain. And it happened, it just did. It happened. And I know that we had one client out of about 2,500 that lost a property because they couldn't pay the loan.
Yep.
And so our retention of clients was enormous. And when everybody was having all these bankruptcies and loans back in 2006 through 2010, we had nobody. We had one client, and they had made a bad decision. But
that's part of the reason why I think the loan programs that are outside of the conventional, like debt service coverage ratio loans and the loans for IRAs that are unconventional, those loans are made by banks who understand the financials of properties, and they're made based on the financials, and that's largely why, John, you didn't have more people losing their properties, because they were solid investments.
They were solid loans. And for everyone's knowledge out there, when you take a loan on a property in an IRA, it does not go against your personal credit. Right. It is non-recourse loan. You can only have a non-recourse loan in an IRA. The government does not allow you to have recourse, does not allow somebody to have recourse of your IRA. So only the property. They can have recourse on the property, but they can't have recourse against you. They can't come against you personally if the loan were to go bad. They're all non-recourse inside of an IRA and a 401k.
I could talk to John for a couple of hours.
We have.
Yeah, we have.
Of the world.
It would be more. It would be more long form, and it would definitely be entertaining. I'm not sure we'd be able to stay on topic. We have a hard time staying on topic anyway. But I really appreciate your insight. I love what you do, and that you've done it for so many of our clients over the years. My gosh, I don't even know how many hundreds of clients of ours that you've helped over the years, and how many hundreds of properties have come through those particular IRAs. But we appreciate it. We appreciate your insight. Thank you so much for being on the show. Any parting words of wisdom, John?
Ron, I would come on your show anytime. I just love what you do, and I love how we work together, and we've always had a great relationship. And my only parting comment is, it's a new day in America, and this is Thanksgiving. And I want everybody to have a great Thanksgiving and know that next year is the sun is shining a lot brighter. Yeah. For my business and thousands of other business people, hundreds of people I've talked to, and thousands others. It is a great day in America. January's the start of great new things.
Awesome. Well, thank you so much, my friend. And for you listening, I couldn't agree more. It's time to get after it in 2025. And actually, I would do it before 2025, which means your countdown clock I've been giving you every week is rapidly leaving the station. So,
and if you think I'm not a man of my word, I've this week bought 2 properties, closing one January and closing on one in December. So my advice is real estate is really, really looking good.
Awesome. All right, everybody. Until next time, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.